Hey guys, welcome to this USD Swiss franc trade outlook. Now, for those of you that have been with me, you would have known that I've posted several outlooks, not videos, but pictures. I'm going to do more videos when I can, but several outlooks on USD Swiss franc, the Swissy itself, and where it could be going in the next couple of weeks or months. Now, I've stuck to a primary target, an upside target of USD Swiss franc for around 1.3, 1.15 first, 1.3 second. Going forward, because of, I guess you can say, the current schematic of things in terms of the coronavirus pandemic and the financial crisis that is currently ongoing. And I still stick to this target as the demand for dollars still remains prominent. Now, my bias for USD Swiss franc remains the same here, and I'm not going to change my upside target. However, and this is a big however, I do believe we could see a move in USD Swiss franc to the downside first. And this is not a decision I've taken lightly, but it does require the analyst and me to be open-minded about how I view the market, which is something that everyone should be exercising anyway. Before I do this and before we go into the schematic of things, what I want to do is to show you my longer term perspective of USD Swiss franc before we get into things. So I'm going to take this off auto, and I'm going to, in fact, I'm going to put the 618 back because this is still my primary area of interest, right? So before we get into anything, USD Swiss franc is definitely a pair to watch. So since 1972, we have seen the Swiss franc strengthen against the dollar. Obviously, around 1972, that's when the dollar was taken off the gold standard, where it was meant to be temporary, and it wasn't temporary. It ended up being permanent, and we saw the dollar decline massively. In essence, this of course saw investors and I guess you can say consumers and speculators exchange their dollars for Swiss franc, and because of, I guess you could say, currency risk, right? In terms of on the reason why the Swiss franc actually has its safe haven status is because of Switzerland's banking system, and in terms of the safety of their currency, people see as holding Swissy or the Swiss franc as a safety play in terms, or as a currency hedge in terms of holding maybe dollars or euros or pounds, and even the Japanese yen. Although in terms of how much interest holding the Swiss franc can give you, it is actually negative because the central bank rate is in the minus. So the Swiss franc central bank has actually set the bank rate at I'm pretty sure it's minus, if it's not -1 or it's minus 0.25. Of course, at the same time, this does not phase investors, and people are still, I guess you can say, bullish on the Swiss franc. So my perspective here is that we are still longer term bearish, without a doubt, right? So I believe we could still see the Swiss franc decline here. We are in a current corrective phase since 2000. I guess you could say since 2011, we have been in a long-term corrective phase. Currently in 2020, so this is a 9-year corrective phase, which is still ongoing. And I do believe we will see a move to the upside. However, during the current schematic of things, and after understanding what other various pairs are doing, we definitely have some downside risks that is definitely prominent and available for the Swiss franc going forward. This includes the fact that I still believe we have a dollar crisis on the way. I do not believe this dollar crisis is going to occur yet, but I do believe it's going to happen. So what I'm looking at here is a 50% retracement, right? So if we consider, before we get to that, if we consider the whole current trend, we are definitely in a bear market. It's very clear we're creating lower highs and lower lows. The current pattern here is definitely up for debate, but we are definitely in a bear market without a doubt. So because of the current schematic of things, and we are definitely in a corrective phase here, we can make a case for an ensuing decline to occur here on USD Swiss franc. Now let's go into the weekly time frame, because we have zoomed out a little bit, because I don't want you to focus on price action. I just want you to focus on market structure and waves right now, because that's what we're looking at. We're looking at from a wave principle perspective, but I am going to simplify it for you guys. Do not worry. I would never outline something that is complicated and that can't be understood. Now, putting it into perspective now, you can see that price action is choppy. First of all, this indicates a correction. Now, corrective waves are normally always choppy, and they occur like this because their choppiness indicates a balance of forces between buyers and sellers. Of course, remember, we still have a market. Without buyers, without sellers, there will be no market, and there will be no discovery of price. So this is one thing we have to remember. We also have to remember simple market mechanics. So USD Swiss franc, you can see that a cycle can never change until the market has met its price targets. Now, I like to use Fibonacci to identify low points and high points. It has been very good to me and has been very accurate to me. Again, as I've suggested to several members, if you haven't read it already, go and read the AJ Frost and Robert Prechter book on the wave principle. I believe it's one of the best books out there in terms of understanding how the market works. And if you want to incorporate the wave principle into your trading, even better in my opinion. Nevertheless, concentrating on the market now, we can still make a case for downside risks here. So what we can see is we are still in a correction. This and to outline first, we have a sharp wave. We had a sharp wave higher, a nice amount of points here, and we had a flat correction, and we had that crash in the Swissy, where the Swissy strengthened because it unpegged the currency from the euro. And since then, we saw the spike downwards, and we continued the corrective phase, which produced another zigzag. And we're now in the final reminiscences of this zigzag pattern. So in this case, we can definitely see the USD Swiss franc hit further lows, because we haven't seen a sharp move higher when the dollar bottomed around the 92 level. So we didn't see that sharp move higher that we needed to see. In this case, this poses downside risks. Although officially we have broken this low. So technically the market is still bearish. But I want to take you to another chart. And this other chart is the Swiss franc Japanese yen. Now, I outlined this to my members as to what we could be looking at going forward, most definitely. But if you can see the Swiss franc and Japanese yen, before I outline on the monthly time frame, in fact, there is some details I'm going to change on the chart fairly quickly before we continue here, which is taking this off the weekly chart and taking this off the weekly chart and taking this off the weekly chart. So I want to keep you on the hourly, daily, and take you off the weekly. Brilliant. I just want to keep you on the daily, actually. Perfect. So going down to the monthly time frame, what I want to outline to you guys is that we've seen, and during, I guess you can say, the dot-com bubble, we saw the Swiss franc, we saw cash flow into the Swiss franc and out of the Japanese yen, but the Swiss franc was favored over any currency. Since then, we have moved higher. We did then enter this corrective wave, this, I guess you could say, this 8 to 9 year corrective phase before we saw the next leg higher. We did hit a high around 139, and the market topped and we then entered the new cycle. What's key here is the fact that price did fall, and then we entered a sideways movement with the price found the bottom. I'm going to go back to the weekly chart and outline. This should also be visible on the monthly and daily, not necessarily the hourly or the minute chart, but you can see, however, how I'm also going to reduce the 618, so it's a lot more condensed. But you can also see how when price topped, we completed a double zigzag pattern, which formed, I guess, at this resistance, and we've entered, I guess you can say, a sideways corrective sequence, but it's slanting against the trend, which makes a case for the fact that upside risks are still possible if we want to consider a zigzag pattern. Normally, we want to be looking at the 618. In terms of equality, we definitely have the potential for a sharp move higher here on Swiss franc Japanese yen. Now, not all my forecasts are correct. However, my long-term forecasts have been on point. This goes back to the Euro GBP and GBP USD, USD CAD before it saw the massive spike higher, and the dollar index, Euro USD, GBP USD when it made its second wave to the downside and saw a big decline in prices, and the list goes on. So in terms of longer term, I've been merely correct, and in terms of time in the market, I've also been correct as well when it comes to the likes of EUR/JPY, which I did outline to my members. So in terms of the market, I can definitely understand when a market is printing a certain recognizable pattern, and when it does, I'm always attentive and alert to what happens. So this is why I want to give you my perspective. Watch out for a big move in the Swiss franc. We understand that there's downside risks in the USD Swiss franc market, and now we understand that there's upside risks. All we need to do is go to the daily time frame and understand that new highs are being made. So previous market structure is being broken automatically. Not only that, if we go to the 4-hour time frame, we can see that a recognizable market pattern is forming here. Now, this is one of my favorites. This would be called the expanded flat. It's not exactly expanded. This is actually technically a normal flat. However, if we consider the current schematic of things, this is definitely a pattern that any Elliott wave analyst will be able to recognize before it occurs. This is because of the sharp C wave that's currently in formation. This wave is expected to meet the lows at 112 and is normally retraced by 382%. So considering the fact that this can occur and price does find support around this region, which we will mark, then we can make a case for a sharp second wave, and which is also the last final leg of this Y wave on the intermediate degree, on the minor degree, and on the minute degree, which is bound to be massive. Then we can make a case for a significant move higher, with our first target being at 118, 121, then 123, which is our original target. So there we have it, guys. Be on alert for a big move in the Swiss franc. If this move does occur, you can expect other moves to occur in other Swiss franc pairs, including CAD Swiss franc also. That's all for now, guys. I hope this video was beneficial. I love to bring out insightful and educational content to keep you guys on the right side of the market. At the end of the day, all I ask is that you share, you help others, and you let it be known of how the markets really work. That's all for now, guys. Hope you enjoyed the video, and keep out for the next video, and I will try to bring out a bi-weekly forecast for this week. Take care, guys.